All right. Well, good day, everyone. We want to welcome you to today's webinar. We are thrilled that you have taken time out of your busy schedules to sit with us today. And just want to welcome you here to our webinar. You're going to see a few faces here today if you're watching us here from your computer. And I will introduce those individuals here just shortly. But I am thrilled that you've been able to take time out of your busy schedules. It seems as this work from home status has actually probably increased a lot of the workload of many of you. And so we really do appreciate you attending today. Hello, everyone. My name is Steve Jackson. I'm the Senior Vice President of Broker Concierge. And again, thrilled to have you. So let's kind of cover some logistics. You know, for many of you here that maybe are joining us for the very first time, for those of you who have certainly been with us, you know that we have been producing these webinars for a number of years, actually, whether it be monthly or quarterly or as frequently as we've needed to, right? We ended up doing some extra webinars for folks here as the COVID-19 kind of took hold earlier here in the spring. And we are going to continue to try to bring to you relevant content, value-added content that can truly help your agency succeed, right? You all have different objectives for your agency, and we want to bring practical, real-life sales strategies, solutions, enhancements to your agency to help you achieve those specific goals. And today is no different. And we are excited to bring some experts here from National General here for you today. So again, I'll introduce them here in just a second. So all of your lines are muted here today. We've got a lot of folks on today, and so your lines are muted, but we still would like to hear from you. Our panel of experts are still going to be available here to you to answer your questions. And so what I ask you to do at any time throughout the webinar here today, if you would go ahead and go into the GoToWebinar menu and go to the question box area, and you can go ahead and type in your question at any time throughout the webinar. So please do that. We want to hear from you. There will be some time. I'm going to be going through a line of questions with the panel here today, but there will be time for you to be able to get your questions answered. Now, if due to time constraints or for whatever reason, we're just unable to answer your specific question, these questions will be gotten to these experts, and they will be able to get back to you directly. So even if we're unable to answer it here right now, please feel free to go ahead and ask your question. We will get to you, all right, as we always have, all right. A popular question is, Steve, are you recording the webinar? Can I get a copy of the deck that you may be presenting? And the answer is yes to both of those questions. So you don't have to type that question. We're gonna take care of that for you. All right. And I'm gonna follow up here at the end of the webinar here today as well, just with some follow-up information and to remind you again as to what we will be delivering to you at the end or after the completion of the webinar today. All right. I think that about does the logistics. Kate, we kind of got introduced to National General here some time ago, and as often the case, our team PrimePay has been involved in the benefits broker space for quite some time. We're speaking to you each individually or through webinar formats, and a lot of the topics that are coming up are around self-funded and level-funded types of plans. And now this newer topic of reference-based pricing is certainly out in the marketplace. And as you all know, we handle certain types of administration, but we certainly do not provide a product such as a level-funded product benefit or self-funded benefit as it relates to on the group health side. And so in connecting with National General, we thought, why not bring in the experts here? Why not bring to you some information here that we think can truly help you in your marketplace today? I know many of you might work with larger groups, but let me tell you, a big portion of your book is in that small group market. And we thought that we would bring to you here today some experts that really know what they're doing, that have the answers to probably most of the questions that you have as it relates to the small group. and level funded and self-funded benefit plans. So I want to introduce some folks here to you. We have Mel Perez, who is the Director of National Accounts here at National General. We've got Justin Taylor, who is a District Sales Manager. All right, Justin. We've got Tyzer Evans, who is also District Sales Manager. And we also have with us here today Patrick Wallace, the Vice President of Field Sales at National General. What I found, folks, is that these guys are really good at what they do, and they have not only the products but the resources to support it. And so we thought that it would be very beneficial for you today, based on other webinars that we've done, to bring to you that level of expertise that you need. All right. So I'm going to turn this over to, I think, actually, who's going to kick off? Maybe Mel, or if you just get started there.
Sure.
And then I'm going to turn it over to the team to go through kind of a presentation to you to cover some rich content for you. And then I'm going to come back and actually kind of moderate through questions directly with this panel. And so I'll come back here in a little bit. So Mel, I'm going to go ahead and turn it over to you.
Great, thanks, Steve. So to all the guests here, really appreciate you taking the time out of your day to spend with us and help and let us talk to you a little bit about what we offer. Now we can be a great solution for you. But as Steve said, I'm Mel Perez, the Director of National Accounts. I have responsibility for all of our largest national partnerships across the country here on the group benefits side. And I've been doing this for almost 20 years. So I'm kind of typecast insurance. Love every bit of it, and looking forward to working with all of you and partnering with you and finding a solution for your clients. Turn over to Justin there. Talk about yourself there for a moment.
Oh, Justin, are you
You're on mute, Justin.
All right, guys. My name is Justin Taylor. I'm here in the Dallas sales office. Started with Assurant Health in Kansas City and was promoted to manage this office and a sales team in October of 2019.
Fantastic. Tyzer?
Tyzer?
Hey, I'm Tyzer Evans. I'm a district manager for the Houston office. Started with National General with Pat out in Atlanta in 2017 and brought me out from California, and then was promoted last April and took over the Houston territory, and have been loving Texas.
Fantastic. Thank you, Tyzer. Pat?
Yeah, hi, my name is Patrick Wallace. I am a Vice President of Field Sales in Atlanta. I started as a sales rep in Boston and moved in 2011. Been with the company for about 14 years, back to the Assurant Health days and, on to the Allstate days. So we've had a long history of success in the small group health market. And today you're going to hear from Justin and Tyzer. They're going to talk about the background of our company, where our niches are, where we're very successful, and then we're going to talk about our core products that are driving business all across the country. We've got 12 field sales offices in varying cities around the country, managed by people like Justin and Tyzer, and they've got many reps underneath them that run their teams in the local community. So I'm going to kick it off to Justin to start with the background on National General and our products.
Yeah, thanks, Pat. There we go. So who is National General? So as Pat mentioned, we were recently acquired by Allstate, which we're all really excited about. But National General, we're a publicly traded company, $5 billion in annual revenue. We're A- rated, and we do provide a full variety and scope of insurance products, from property casualty lending up to short-term medical, all the way to the group health product that we're going to talk about today. So first, question: why self-funding? Why should you consider self-funding for your clients? Self-funding's been around a long time. It was once, thought of just a large group solution to drive down cost to the plan. What we did is we took this idea and packaged it and bundled it specifically for small groups. We've been selling this product to small groups for almost 20 years, and we've had tremendous success and experience with it. What we're doing is we're taking the risk profile of the group on an individual basis for the smaller groups, and when we compare the risk and assess it, they can save up to 30% compared to a fully insured guaranteed issue product. It looks, feels, smells just like the fully insured options out there. Deductibles are deductibles, copays are copays, and there's just one monthly premium. So to the group and to the employees, it looks the exact same. What we're doing on the back end is slightly different, and I'll talk about that here on the next slide. There's no fluctuation in the monthly bills or premiums based on the risk, and as you can see, that last bullet point, 61% of covered workers are on some sort of partial or self-funded plan. So the concept isn't new. A lot of people just are not quite familiar with how we've made it available to the smaller groups. So what is level funding? So I'll start with the graph on the right here. So a fully insured product, guaranteed issue, one monthly premium goes directly to the insurance carrier. If nobody uses the plan and no claims come, that's just money that goes to the carrier and they've made a little profit. What we've done is we've broken down that same monthly premium into three unique buckets. The first bucket, which I'll start at the bottom, is the claims funding. So we take the one monthly premium, we set aside an amount for the claims funding, and that is what pays claims for the group. There's a smaller bucket for the administrative costs. That's what manages all the moving parts. So the employer does not have to worry about anything. He sends us one check in, and we take it from there. That's the network cost, the PBM. We do use a third-party administrator to manage that for them, but all the customer service still goes directly to National General. And then the last bucket, which is the one that you really want to make sure you understand, is the stop loss. If there are any claims that exceed that claims fund, and there's no limit to that, it's going to be covered by National General. So $1 million claim on day one, we're going to cover anything outside of the claims fund. If there's less than expected claims at the end of the year, we're going to refund a portion of that claims fund back to the group. So no risk, one monthly premium, and they're doing their own funding. We're managing it for them. So market niches that we provide, we'll do pretty much anything 2 to 500, anything over 51 enrolled, we don't need applications on. Anything under 51, we do take applications on the employees. We're just looking at 5 years of health history, and our real sweet spot is kind of that 5 to 25 space. Flexible participation eligibility, we'll write 1099 groups. That's one 1099 or all 1099s. We'll write virgin groups that aren't currently on a plan. We'll write groups that are, or we don't have any ineligible industries. So we will write any group. If the health is better than average, we'll write it. So we do love the unique stuff, but every group's a fit, and we'll talk about that here in a bit. You can see our top verticals are down below. But like I said, if the risk fits, we'll write any group. As Pat mentioned, we have offices all over the country. So while Tizer and I are based here in Texas, we do have offices in every market, and we do have networks that cover every market. So you are completely taken care of, and you're in good hands no matter where you're located. Heat map of our competitive markets. As you can see, it's mostly strong markets. Something to keep in mind, the challenging markets, the blue states, those are generally defined by state laws that make it difficult for any level funded carrier in those states. That's not to say we don't have a solution there. It's just markets where it has to be a little more unique, whether it be group size or something of that nature. But like I said, we've got several national networks, Cigna, Aetna, PHCS, we've got regional networks, we've got skinny networks, we've got in-network only plans. So we can provide a solution anywhere in the country. So how do you prospect it? So that first bullet point's huge. Every employer is a prospect. There's no, we're writing more and more groups every month, and more groups are qualifying for this every month for that reason. So every group is an opportunity. If they're looking to save money, if they're talking about rising costs or deductibles or limited network availability, that's obviously a great fit for us. It's a door opener. We've got so many options. The reference base that Tizer will talk about in a minute, it just gets you in the door because you've got some unique things that many brokers are not out there marketing. There's any group's prospect, so just qualify them, chat with them, see what they're looking for, and we can help you find a good fit for them. So we mentioned underwriting, on groups under 51 enrolled, we do take applications. You can see, there's nothing wrong with asking the questions. Our average group size is 15 enrolled. If you think about a group of that size, they generally know if there's something very serious going on within the group. And there's nothing wrong asking to get a little insight to it, because at the end of the day, if we can save the group time and money, we want to. That being said, we have full access to the underwriting medical underwriting guide. So if a group gives you some insight, or you have a prospect or a client that you already know some things are going on, give us a call. We'll look it up. We'll let you know how it impacts the group. Obviously, there are some groups that aren't always a good fit based on the risk. And if we can save you and them and ourselves time on the applications piece, we want to do that. So we'll help you to go out there and qualify, and we'll give you some insight and how maybe a particular condition or medication would impact the group. That being said, it is important to know, the costs of healthcare are always evolving. Conditions that maybe in the past had not been a good underwriting option, that stuff changes all the time. Every group we write, has high blood pressure, diabetes, asthma. It all depends, on the size and premiums and the future risk. That's what we're looking at when we're looking at underwriting, is future risk. So here's a quick case study on an actual group that we wrote. You can see here, fully insured, monthly premium $14,000. Several conditions that might deter certain brokers, thinking there's a lot of risk there. We underwrote it, and we were still able to save them, a significant amount of money. And when you consider some of these smaller groups and what they're going through day to day, that stuff adds up real quick. So they're providing quality benefits to retain or bring on new talent, and then they're saving money on their bottom line to, do whatever they want with, but, put it towards something more impactful to their business. So submitting a quote. So, quoting is super, super easy for us. We just need gender and date of birth. Of course, the more info, the better. If you've got a current rates or renewal or benefits, send it all over. We'll get a quote turned around within 24 hours. So we can quote anything, whether it be a really good prospect that or you have no idea and we're just trying to go after and get some new business. We love to help you with that. We can quote anything for you. We get your quote back within 24 hours, assuming that the group, likes what they see, which up to 30% savings, should be a no-brainer. Then they would move on to applications. We can do paper apps. We have our own proprietary software. We do partner with several other companies, for online apps, but ours we have as well. We'll get you firm, underwritten rates out the door within 48 hours. Earlier in the month, times like right now, there's groups that are coming back within a day. In December, the busiest time of the year, it's going to be closer to 48 hours. It should never be longer. If those rates are sellable, we'll move to the next step. If not, we can always play with plan design and all that. We can do that right over the phone. Our biggest value to you is your rep, where we can help you find a solution to the group to save money. And then the final rate, submit to issue. So if they want to move forward, one fillable PDF, we can do DocuSign, all that. We'll send it to you guys. We'll just, wait for you to get it back to us, and we can get a group installed in 3 to 5 business days. So that goes, today all the way to the last day of the year, you're going to get a temporary ID card in 5 business days. It's very important to keep in mind, a lot of our competition is going to be looking at, 6, 8 weeks to install groups. we can still do it in 5 business days. Our value is, our speed is a big piece of our value, and working with us and, so use your sales rep, keeping us in the loop and letting us know how we can help you is incredibly important there. Couple plan enhancements, with the plan designs we have, they're all completely ACA compliant. We also have, almost universal flexibility. We've got a million options out there. We also are able to provide Teledoc, which is telemedicine. We have Vitality, which is a wellness product available to the group to provide additional benefits. A little more info on those with the Vitality wellness product. If they attach their Apple Watch or Garmin or whatever, they can save up to 5% off their premiums by providing that data. And then Teledoc, telemedicine, for those of you that don't know, it's a huge benefit, especially for those with kids. Middle of the night, kids got an earache or throwing up. You can call Teledoc. They're 24 hours, and they can give you a hand and give you. They can do medicine. They can give you support, and great for those parents out there. And then on the submission process, back to that, you've got our full support from day one. We only get paid if it sells, so we're here to help you and do anything we can to help you find a solution to the group. As I mentioned, 3 to 5 business days for ID cards, and we've got their proprietary apps or paper apps. But we're here for you. We're going to hold your hand. Whether you've done 1 group or a million groups, you've got everything you need with us. We'll do agent meetings. We can set up Zoom calls, whatever. Just keep us in the loop, and we're happy to help. That being said, I'll pass it over to Tyser in our Houston office to talk about our core value product.
Cool. Thanks, Justin. So I'm going to be talking to everybody today about our product's core value is what we have called it, but it is reference-based pricing. So with that, I've got a couple slides on it to talk to you about. All right. Might need a little help here from someone to move the slide for you,
Yeah, we'll get you there. There we go.
Perfect. All right, thanks. So what is reference-based pricing? It's been kind of a buzzword in the industry. Definitely in the last 24 months, it's been a lot more prevalent. We released our reference-based pricing product in fall of 2017. And really what it is at the core, our core value, is it's a non-network product. So we're paying the providers directly off a multitude of Medicare. You can see here, we're paying the providers 150% of Medicare for inpatient services, 130% for outpatient and physician services. And what this does is it really passes a lot of savings back to the employers. So the average negotiated network cost nationally is about 241% of Medicare. Now, it can be a lot more. In some markets like Wyoming, we know it's more roughly about 450% of Medicare. Then you have other markets where it can be a little less than the 241%. But that's the national average. So what we've done is we've taken out the network fat, put those savings back into the employers and employees' pockets, and we've also opened up the network restriction. So networks were kind of the way they've evolved has been great, and that's what we've gotten used to. But by and large, there can be a lot of restrictions with these city networks that you see HMOs have become more prevalent to help groups with cost savings. So what we've done now is been able to get the same type of cost savings without any type of network restrictions, which is a real win. Some of the things that you'll see there, the last bullet point, low balance bill experience. So this is something that I'll talk a little bit more when we cover our advocacy team. But our experience, it comes up as a pain point, has been really, really low. 97.5% of the time, providers are taking exactly what we're giving them. We have an average blended rate that we pay of 154% to Medicare. So by and large, over the last 3 years, providers are taking exactly what we're giving them directly. It's only 3.5% of the time that members are receiving a balanced bill, and we're able to negotiate that 100% of the time and take care of that with our advocacy team, which I'll dive into. All right, so I mentioned that we have our core value product. Now, before I get into the member advocacy team, we did want to talk a little bit about some different type of options that we have, and I'll be covering two today. So we have our core value again, which is just as reference-based pricing peer. So it's just straight up, there's no network, there's no option to get out of it. It's reference-based pricing. And it's very intriguing for a lot of business owners, especially given the situation with COVID. They're looking at all costs to save money right now. My father-in-law is a small business owner. He owns a chain of restaurants, and presented with an option to look at level funded to save an additional 10 to 15 to 20%, loves the idea, right? He automatically can put more cash flow back into his business. Now you take out the network fat and we look at reference-based pricing option. Now we're getting cost savings that are additional 10 to 15, 20, 30% below level funded options. So if you go from fully insured to reference-based pricing, we're able to potentially save a group anywhere from 30 to 50% on any given day. And so you show that to a small business owner in a time where they're having to furlough people, lay people off, cut salaries, not give bonuses. It's really, really meaningful to be able to save a group anywhere. The last group that I put on core value was last month. I still do a little production here and there, and we're able to save the group $108,000. Now, in a time where everybody's needing cash, what can six figures do to help keep a business afloat for 3 to 6 months, maybe a year even? It means everything to them. And so this is a great solution for them. So, when brokers are going out there, one, they're winning business with it, but two, they're having these talks. And sometimes the business owner loves the concept of it. They love the idea of reference-based pricing, but they can be a little scared, right? It's not familiar to them. We've been programmed to be used to using a network. So what we've come up with is a solution for someone who wants to dip their toe in the water, but doesn't want to go all the way with reference-based pricing, where we have our core value flex option. And what that is we start the group out on core value or reference-based pricing. And in the month 4 or 5, if they don't like the way that the program is operating, they can pivot back to a PPO platform. So the first 4 or 5 months, they're going to be on reference-based pricing, but they're going to have an out on month 4 or 5. And then it takes about 60 days to implement the network, and then the rest of the policy terms that they will be on a PPO. So it kind of gives them the best of both worlds. They can experience reference-based pricing knowing that they have an out. By and large, it's like 98% of the time they stay in reference-based pricing because the program works so well. But it's a great option, and it's a slight buy-up. It's about a 3 to 4% buy-up from just reference-based pricing on its own because you do have the network out.
Here, I'll help you along here, Tizer.
Thanks. Appreciate it.
There we go.
I always need help somewhere. All right.
That's all good.
Yeah, that's Pat. He knows. Our MAPS team is our member advocacy program, and this is really the linchpin that really makes this program so successful, is that in the events that a member has any issue or they need assistance with scheduling appointments, finding low-cost providers, having questions answered, when they get the bounce bill, this is the member-facing platform where people have 90 days to get the bounce bill over to our member advocacy team, which is run by our TPA, Allied Benefit Systems, which is based out of Chicago. They help with us with probably 90% of our block. The other TPA that we use is Meritain, which is owned by Aetna. I'm sure many of you are familiar with. But Allied Benefit, when we went and Pat was actually on the board to help to design this whole program. They went to Allied and they said, hey, we need you guys to really step up and create something that's really solid for us. We don't want to have any hiccups or any noise in the broker community with this program. And so Allied has a dedicated team that is just for our product, just for reference-based pricing. So when members they need assistance, with whatever it is, they can call the MAPS team, and the MAPS team is there to assist them. So again, with the balance billing, they turn over the balance bill to, if they get one over to Allied, negotiates the bill away. So as I said, we're 3 years into the program, 100% of our balance bills have been resolved. So it's worked fantastic. We haven't had any issues. Nothing's gone to litigation or anything like that. It's some of the noise that you hear in the marketplace. It's been very, very successful. And it's now reference-based pricing makes up about 35% of our block. And we have $1 billion block. So if you look at that, you can see that more and more employers are starting to gravitate towards things that make sense from an operational standpoint and how can they save money. And more brokers are starting to offer this in their product solutions, because as you take a consultative approach and you're showing fully insured options and you're showing level funded options, this is just the next progression of how we can have some transparency, how claims are being paid, and be able to put money back into employers and employees' pockets. And think about this, from an employee perspective, where a lot of times what we're doing now is because of the fully insured world where the rates are going up and up and up, employers are having to have higher deductibles and less copay. So with that, employees are coming out of pocket a lot more. So now you're able to offer richer plans with cost savings as far as premiums. And now when they go to get an inpatient or outpatient service, the employee's paying the $150 or $130. Even if they are balanced billed for a difference, we never come back and ask for more. So that directly results in more savings in employees' pocket. And so you talk about the state of where we're at going into a recession and with COVID. You talk about people taking salary cuts and being furloughed. That extra $100 or $200 can be really meaningful for buying groceries or buying gas. So we kind of want to point that out, that the member advocacy program, it has to be pressed upon an educational process that has to call them no matter what. And this is our other options. I mentioned there's two different options we have with core value or reference-based pricing. And the section option is core value access. And now this isn't available in all states. It's in select states, and we have a map on the next slide to kind of show you where that's at, but it is available in Texas. What core value access is that, again, we know that a lot of our groups, people, they just want to go see their primary care physician, and they don't want to have any interruptions with going to see the doctor that they've had for 20 years, or they have a specific pediatrician that they want to take their kids to. So what we've done is we've built in a physician's wrap into our core value product. So as long as you're going to see a physician like your general practitioner or your pediatrician, you will have a network with PHCS to be able to go and see your doctor. So there would never be a time where you couldn't get in and have access to your general physician. Now, if you have any outpatient or inpatient services, that's still going to be paid at the $130 and $150, and we're paying the provider directly. So this has been another great solution for groups that are looking for the cost savings, but want a little bit of extra security. And again, it's only a 3 to 4% rate up. The last group I put on this in Texas, we saved, it was a 24-man group. We were able to save $65,000. And they felt great that they had a network to go see their general practitioner, but they're still having transparency on their billing for inpatient, outpatient services, and still saving a buttload of money, which is most important. And lastly, this is just kind of showing where we offer the access. So I believe now we've got core value. Is it 46, Pat, out of the 50 states, I believe?
Yes.
Yeah.
I think you have it right
46
there.
out of the
just a couple.
50 states. And all 46 states, you can offer core flex. With the core access, it's only in those dark blue states. Anything that National General likes to do, they take a smart approach, and they just don't launch a product out to market. They like to take a very measured kind of role of how it's working and how it's gravitating. Even when we released reference-based pricing, we did it in 10 states and let it roll for 12 months, then 10 states more, and then we did 19, and then opened it up everywhere to make sure that we're having the experience and the success we wanted. So I anticipate core access will be opened up like regular RVP and core flex. And I think with that, I'm all set.
Oh, fantastic. Tizer and Justin, great information here. I tell you, there's been such a consistent theme, I know, with our employers here as we work with on Prime Pay, whether it be through payroll processing, right, or through our benefit administration services, that there's this huge focus on cost containment. And so I know that this topic is just so important for today's age. So I really appreciate those details. So I want to just remind everyone, and actually you guys have been doing a really good job of asking questions. We've got a lot of questions from the audience here today that we will attack here in just a moment. But what I'd ask you to do, if you haven't asked your question here yet, go ahead and go into the question box in the menu item, go to webinar menu, and go ahead and type in your question here, and we'll do our best to get to your question. Before we get going on that, though, I've got a few questions that I wanted to kind of bring here to our panel of experts here today. And so I'm going to go ahead and get started with that. And then, folks, as I'm going along, go ahead and type in your question. And again, we'll do our best to connect with you here in just a little bit. So I'm going to open this up here, to the panel. We hear from many brokers that level funding, this is only for the big guys, right? This is large employers only, or just limited, I guess, in nature to that segment, of an employer group, and not really for small group at all. How do we change that mindset? Not only with brokers, right? That's one aspect of it, kind of building their confidence, but also with their clients.
Yeah, I can take that one. So, we mentioned, earlier in the presentation that that's, a nice benefit of what we've done is we've taken a strategy that was traditionally for the larger guys and packaged it and designed it for the small guys. Couple, pieces on that can help support that and that it does work. National General, that's our bread and butter. Our average group size is around 15 enrolled. So we've been doing it for over 20 years. We kind of designed this product specifically when we were back with Assurant Health, and we love the small guys. It's a great fit for us. It's always going to be a great fit for us, and we're constantly updating our underwriting methodology to consistently be a fit for the small guys.
That's fantastic, Justin. So if you all heard that, he just said the average group size was 15. Did I get that right, Justin? 15?
Yeah. Yep.
Yeah. I mean, folks, if that doesn't start to tell you, and then to hear kind of what amount of business they're doing nationally here, tells you that there's a real appetite, not only a solution, but a real appetite for it as well. Thank you, Justin. So I know a key concern surrounding level or self-funded products is certainly the renewal process, right? And the increases or the potential of increases that can affect those employers at renewal. Could one of you just provide some additional insight, I guess, in regard to this concern?
Yeah, so I'll take that one. So the renewals obviously can be a big concern for anybody because you don't want to shop business every year. What we've done is take a really unique approach that benefits us and our broker partners and the groups, which we call predictive modeling. And we renew our groups the same way in theory as we write new business. We look at what you have for conditions. So new business, we take applications and we assess a risk and we apply a medical load. For renewals, we look at your claims experience and then the information on any new hires and those who have terminated, and we give you a renewal based on what we expect to happen in year 2. Then we do it again in year 3. What's unique about us is that we will take any information you give us during that renewal process and move your renewal. So you've got somebody who just got diagnosed with a condition and or had a baby. They had a baby in the process, and it was a premature baby with a huge claim, and we may have had a rating for it, but that baby is now born and healthy. We will take that rating off for a potential high-risk pregnancy that we're rating for, bringing it from a high renewal down to a single digit potentially. So any information you give us is very helpful, and it allows you to know where your group should be, because those really high-risk groups should be in the ACA world. So you have a really good handle on where your groups are because of our transparency in the renewal process.
No, that's really good. I mean, it ties in, I guess, kind of nicely to my next question, just about dealing or an employer's uneasiness with fluctuating claims, or at least that specific topic, and potentially, I guess, a reality. I mean, how do you guys help brokers better communicate to an employer about this fear of fluctuating claims?
We take a bundled approach. So we give you everything that you need. We give you the administration of the plan, we give you the claims payments of the plan, and we give you the stop loss insurance. And all we ask the employer to do is pay one monthly premium, and we give a refund at the end if it's unused. But throughout the year, they pay that one monthly premium. The claims are going to get paid as long as they're covered under the contract. So there is no fluctuating cost, but we're having you fund the maximum exposure.
Fantastic. Yeah, much better clarity. I mean, as you really kind of dive into it there a little bit more, you can really remove, actually, I think, a lot of those fears. So one interesting topic of conversation that's come up quite a bit, and I wanted to get your take, is, due to COVID-19, we've seen, we're hearing, but we're seeing that employers are kind of keeping the status quo here a lot of times here as it relates to their medical plans, maybe not making many changes just due to the pandemic that we're in here today. But how, from a broker as a consultant, you still need to sit there and be able to drive strategy, right? Cost containment, whatever it may be with, that broker with their client. So how might you guys help these brokers understand that having comprehensive renewal strategy discussions with employers, even at this time, is really an important step to take with their clients?
Yeah, Steve, I'll take that one. So I think it kind of goes back to what I was just talking about. Really sitting down, and your value add as a broker, in my opinion, is that you're using a consultative approach to help them manage their business more effectively. And so I think that a lot of times, benefits are not something that they're always on the mind because they help with retention, right, of employees, but they're not always looking at it from a perspective of strategy to help put money back into their business. So bringing them some alternative solutions, showing where they can save money and put money back into their business, retain employees with better benefits by using level funded or reference-based pricing, will really show you and add a lot of value and really cement the relationship that you've already built with them.
Yeah, always got to you can open up doors with these kind of conversations, and they may not act immediately, but maybe act at some point, here down the road, based on their situation. Thank you, Tizer. So I guess, several brokers have shared their hesitancy with adding new carriers to their product portfolio with their clients. We certainly have seen that kind of, nationally or with any agency to some degree. How does National General manage these types of objections?
Yeah, I'll take that one. We definitely hear that, and adding new carriers is time consuming and it can be a challenge, but we've got a lot of value to provide to groups between our various network options, our core value program, and the solutions that we can provide with the product flexibility. And additionally, remember, quoting is super, super easy for us. Just give us a shot and we'll show you real quick the value we can bring to the table by just running a quick quote for you.
No, very good, Justin. And maybe to kind of dovetail that then just a little bit further, there's probably in every market territory, there is a carrier leader, right? A carrier that dominates the market. We might think of Blue Cross Blue Shield offhand, but there's certainly others that are going to be dominant in a particular territory. So just kind of curious with you guys here, can you provide some feedback to help these brokers find ways to better consult with their clients about expanding those carrier selections beyond the one that has the greatest market share to kind of expand their thought?
Yeah, absolutely. I can take that question. So one of the questions I like to talk to brokers about is really, what's their marketing strategy and how do you differentiate yourself from your competition? If you use Blue Cross or another fully insured carrier, if you go into a meeting and you're competing with an incumbent broker, or you are the incumbent broker and someone's encroaching on the group, and you both are showing Ross and you both have the same 50-can plans, really, where's your advantage? You're both showing the exact same rates, and then it's more or less a popularity contest. And so by using carriers like us, you're able to differentiate yourself and showing that you have a broad arsenal of different product offerings and solutions that you can show your clients. And so it's really important to get a lay of the land and understand what's out there and available to you and to your clients. And it's a great way to differentiate yourself from your competition, and also a great way to make sure you're showing your clients all options on the table. So if you are encroached upon, if you are the incumbent, that you're not going to lose any business as well.
Very good. All right. No, thank you. All right, just a couple more, and because I'm seeing a ton of questions come through, and I want to make sure we have time with those as well. So I would say that a lot of the brokers that we work with in our markets, a lot of these brokers are mostly in the fully insured market space. They've got, a lot of confidence there, comfort, as with maybe the employer as well. But how do you suggest these brokers kind of break into the self-funded space? Is there an elixir? What would you guys recommend and how to do that?
Yeah, I think the savings, they're huge. When you can save up to 30% to the premium, when you can show some really unique options that are never available, on the fully insured side, groups they're looking for savings. Who isn't, right? So I think that just showing them all the different ideas and avenues we can go to provide something to save them money will go a long way.
Very good. Yeah, I mean, cost containment is such a big topic here right now. You've got to talk about it. You have to talk about it. So I will say this: I've been impressed with how large and actually far-reaching National General actually is. You guys are big, and I even think I heard something about Allstate in there. That you'd mentioned there, and so I guess there are though still many brokers and employers maybe not as familiar with your name. And I, can you shed some light on that? I mean, I think you're more familiar than we might think.
Yeah, Steve, I could take that one. So National General, you might be familiar with General Motors or Assurant Health, and also Allstate. So we trace our roots back to 1939 as GMAC or GM Motors Insurance Company. Right. So back when 2008 came along and GM had some financial difficulties, the Carfunkel family acquired GMAC Insurance and rebranded it as National General. And then we coupled in a couple of smaller acquisitions, including Assurant Health, which actually most of my colleagues came from, including Patrick, Justin, and Tizer. They fast forward to the present day, and then also again in a couple of months in Q1 of 2021, Allstate Insurance has announced their acquisition of National General. We'll be closing in a couple of months, and we will become a part of the Allstate family, continue to bolster our size and capacity. We've grown substantially, though, over the years, roughly 20% year over year since the rebranding of National General under the leadership of the Carfunkel family. We'll continue to do that. We continue to bolster our product there.
Fantastic. Yeah, I mean, I see. I feel like a lot of similarities because Prime Pay, we're national. We've got such a strong reach, but yet just not as familiar of a name, right, out there. But you guys actually have a rich history, which is really nice to see. Well, let's do this. I had another question. I'm gonna actually forgo it because I'm looking at some of the questions and it might address some even in my last question that I was going to have. So I don't know if Patrick, have you been taking a look? Do you see some questions that we can dive into? You want me to look at those? Yeah.
No, I've been keeping track of them, and there's a lot, and I was trying to prioritize them, and they all have such a high priority. I'm going to go through them, Steve, if it makes sense, and I'll answer the ones that I can. Some of them are quick, and if I need to shoot these off to the guys, I'm going to.
Perfect.
So I'm going to start at the top. Okay, good. Can someone please contact me? That's not the right one to start with. How do you overcome employees jumping on and off the plan when rates are received? That is the biggest problem we encounter on a regular basis. And we completely understand that it's a challenge because a low rate attracts more people. So what we recommend, and Tizer, Justin, please add to this if you think it makes sense, is have those people that are on the plan currently now fill out the application, and anybody who has a very high interest in joining the plan, regardless of the cost, fill out the applications. That would give us the ability to get a firm rate to avoid getting people jumping on and filling out applications that are because of the cost that's really low, that may most likely will get some kind of increase after underwriting. Now, if we get a really good underwriting rate after those individuals have filled it out and you open it up to those other people, then it's easier to manage that because one person's risk could jump the whole group out. And if you tell that person now because the rate you're sharing with them is $900 a single rate, they're likely to just not back off. We waive them out and then we're back to the rate we had before. It can be a challenge, but you got to work with National General, with your sales rep, and who work very closely with their managers like Justin and Tizer and myself to make sure we come up with the best solution that we possibly can. Tizer, why don't you answer this one for me? What kind of data analytics is provided to the group? How robust is it?
It's just as robust as you get with any other carrier. So we are able to give all the large claims you would normally see. You can get as detailed as you want or as large as you want. The TPAs that we work with that are provided are excellent. As the group onboards as well, with both TPAs, you'll have access to a portal, and you'll get with Meritan a reconciliation report of how the group's running. And then with Allied, you can jump in every month and look in the portal and look how the group's running as well.
Thank you, Tizer. And I'm going to shoot this one to Steve or Mel. Feel free to jump in and answer this one. Is there anything special to using National General with Prime?
Well, I don't know, Mel, if you want to take it, but I can answer.
Sure. Sorry, I was on mute there. We view PrimePay definitely as a partner in the market. Like Steve said earlier, excuse me, on the call, we met quite some time ago, and we're working to offer a solution to all of you together. PrimePay for your HCM integration and the National General is offering our solution, a level funded chassis for your clients. As far as integrating between National General and PrimePay, we don't integrate directly together, but if there's a need, we can look at an integration through a third party, Ben admin type system, and we'll continue to sync up and get closer and closer as partners for all of you. Steve, anything you'd like to add to that?
Just to add, yeah, we, there's no formal agreement, between PrimePay and National General here right now, but we just saw similarities in how we can drive some expertise, not only expertise in content, but also real solutions to you and a comprehensive suite of solutions, as Mel had mentioned, from HCM, to the medical product. I mean, there's just so much that's tied into that. And so maybe more to come, right? Maybe down the road. But we're just thrilled to be able to bring to you, at least here today, kind of hopefully meaningful, practical content here that you can use right away.
Thank you.
Patrick?
So, yes, one thing that scares a small group is the potential of a non-renewal and being forced back into the ACA market. What alarms National General to come back with a non-renewal? What is your percentage of non-renewal? So totally understand that, but there's no penalty for going back into the ACA market. They have to take you. So that being said, non-renewals just don't happen. They're very, very scarce. It happens, in our 12,000 to 13,000 group book. I might see a couple of them a quarter, and it's usually something we're just going to give you a renewal based on what, like I said earlier, the predictive modeling, whatever that renewal is, to make sure that we want the business, we give you. And if you take it, we're happy that you took it at that renewal. So we do have some volatility on the really risky groups, when you might have a 5-life group that has that might be causing risk that's triple the premium that we're collecting. But the non-renewals just aren't a thing anymore. Yes, we've reserved the right, and for those things are going to be due to fraud, intentional malice to the insurance company, where we might non-renew a group. But I just, I don't see it ever. And I've been here for 14 years. It's just not something we like to practice, but it's in our contract that we can do it. The next one is, do you require employees to complete a medical questionnaire for a final quote? And the answer is yes, we do, in the under 50 space, and then sometimes in the 50 plus space. But generally speaking, under 50 space, it's the only way we take our medical risk. We've tried other avenues, and it just it wasn't fruitful, and we did not succeed gathering risks without getting full medical applications. We are constantly reviewing different ways to collect that data, and if something presents itself that we think is a good fit for our block of business, we're certainly going to entertain it. But today, applications are the way to go. We offer it through whatever you can get us when we'll give you a rate, an underwritten rate, but then to submit, if it's on our applications, on handwritten, through our own various portals, great. Form Fire, Easy Apps, eHealth app, to name a few, and then a bunch of different electronic signatures. And when you get connected with your rep or the manager in that office, they will give you a comprehensive list of what different types of enrollment methods we take. My favorite question always is, what is the commission rate? We pride ourselves on providing a product that's as good or better than anything else in the market, and we also do that at the highest possible commission. Our products have standard comp on the entire fully insured premium equivalent, which is stop loss, admin, and claim fund. We pay 8% on our highest standard comp, which is reference-based pricing groups under 25, and then it can go down to groups 25 plus standard comp on a network at 6%. That being said, we allow the agent to dial up as high as 30, which I understand is just something we really don't do often, but most of our agents dial up at least a couple points on every group. So base comp, 6 to 8%, dial up whatever you tell us to put into the rates. Next question is Vitality, Wellness, and Teledoc embedded into the program regardless of group size, or is it an additional cost PEPM? Each one of them is an additional cost of $5 PEPM. Unless you're on reference-based pricing, Teledoc would be free. What is the difference in the core value product being offered in Indiana compared to other areas? The rates based on zip code. We have roughly 8 rate areas per state, so we're going to be rating your group on demographics, so gender, date of birth, zip code, standard industry code. So your rates in Indiana are going to be different than they would be elsewhere because of the zip code. Other than that, the product is identical. The national brokerages have to meet EBI, TDA growth targets. How does reducing premiums by 30% help the big boys grow profits? Simple. Use us to prospect. Use us to grow your book. At 30%, you should be able to pick up new clients on our reference-based pricing and our network products. Because I want to be clear, our reference-based pricing is still less than 40% of our book. We still sell, and we don't want this spread to really change that much. We still sell majority of our products with using the Cigna and Aetna networks. How much extra time does the HR have to put in to learn? That's also an objection. Understood. I think the education process is fairly quick. Our job is to make sure you as the agent are educated to help your employers and their members be educated. So we'll do as much work as we can for you to get that education across. And we, depending on the size of the group, we might go meet with that group. But we'll take that off the hands of the HR person. They just need to be educated themselves. And the education is really when it comes to reference-based pricing. And that, again, it doesn't have to be the route they take. It's a route to save money, additional money. But our network plans are incredibly competitive. And the education on that would be the same education as changing from Blue Cross ACA to National General level funded or Aetna level funded. It's a health plan you get in the card. So we try to keep it simple, and we try to do a lot of that work for you.
Hey, Patrick, I would just say maybe a couple more questions just for a lieu of time, at least here today. If you're
sure.
There's a ton of them. You guys have been doing great. Holy cow. Yeah, you guys have a ton of questions coming through here.
Okay. If a group terminates their plan prior to the end of the policy year, the company being bought out or going out of business, is there a liability? Are they still protected? So one of the unique things about our plan is, yes, there is a liability up to whatever's left to fund your claim account. So each month you're funding at 1/12 at a time. So if you leave at 6-month mark, you'll owe 6 months back if there has been claims used. If you're getting a surplus back, you won't owe anything. So it all depends. It's impossible to know how many claims are sitting out there or if anybody had been sick. But the difference between us and other products out there is that we keep a full stop loss protection with a run out as long as the claim advancements have been paid back. So if you owe $5,000 in claim advances and there's a $5 million claim that was eligible to be paid because it was incurred before the run out, we'll pay the $5 million claim if they pay the $5,000 advance back. Now, we have got competitors out there that just will cut off the insurance immediately and the advances would be required to pay back. So there is a little bit of risk, but we're very transparent about that up front to make sure the business owners knows exactly what they're buying and that what the potential risks are. And the potential risk would be, potential buyout, but going out of business, we generally don't have to recoup any money. So at that, I can go through all of these questions, including the ones I answered, and write out answers to them, and we can get them to you.
Yeah,
there's a lot more.
Yeah, there is a lot more. There's some fantastic questions in here. So let's do this. To my panel of experts here, thank you. There's a tremendous amount of information that we actually got to kind of unpack, there a little bit. It's kind of getting to know National General there a little bit, but it's also diving into, there's just so much said about, the self-funded level and then reference-based pricing that I'm seeing a lot of questions, even right around that, that RBP type of topic. So we're going to get these questions answered. So if we were unable to answer them directly here today, this panel of experts will reach out with those answers and just answer any additional questions that you may have. There's been also questions here just about where can I learn more? Get me in contact. I'd like to learn more here about these guys and what they're doing. And so I've got some contact information here just up on the screen, but we'll get that information to you. So after this webinar has concluded, we will be sending out a follow-up email to you. That follow-up email will have a copy of the deck, so what we've shown to you here today, and we're also providing you a recording of the presentation here today. So you can, I know some of you have said, hey, I'd love to get this in front of my agency, a lot of folks that couldn't join. And so we're going to be able to get you that recording link. That way everyone in your agency can take a view of it here. So thank you again here to our panel. Just great information. So appreciative of your time here today and your expertise. We're going to continue here at PrimePay to deliver to you all information and strategies that are going to just help you succeed, whether it be COVID-19 or we're back to our regular life that we all know, not necessarily this work from home environment, right? Back at it again. And so we hope to continue to do that. And, so look for more information here soon. We're working on our calendar here as we head here into the fall. And so you can visit brokerconcierge.com, go to our event page there. And as soon as we have additional webinars and information events posted, you can register there at your leisure. So with that, I'm going to say thank you to the panelists. Thank you to attendees, and we look forward to seeing you next time. So you all be well out there, and we'll talk to you again. Thank you all.
Thanks.